Welcome back to Squawk on the Street. Real estate, one of the worst performing sectors on the year, behind just healthcare and consumer staples, all underperformers. Home builders across the board remain in correction territory, which means they're 10% or more from their 52-week highs. Lennar is the worst of the group. And then watch KB Home Shares today, reducing full-year sales guidance due to lower prices. The company COO saying on the call they're not seeing the uptick in demand they'd expect, given the recent pullback in mortgage rates. So more evidence, Carl, of the housing market that's been kind of stuck in the mud. We got it in existing home sales. KB Home on the plus side, lower prices should help with the inflation picture.
More about that with John Lovallo, who joins us here at Post 9, an analyst at UBS. John, it's good to see you. Welcome.
Thank you.
It sounds like you are willing to give the season a little more time, yes?
Correct.
Tell us about that.
So I think there's a couple things going on. One, KB put up a really good quarter yesterday. They beat on all KPIs, deliveries, revenue, gross margin, operating margin, EPS, orders. Now, they did take their forecast down slightly, but importantly, they noted stabilization across the broad housing market, and particularly in markets that are very important, like Florida and Texas. This is critical. And I would say on top of that, I think it's becoming increasingly clear to us that the cut that they made and the cut that Lennar made to their estimates is the final cut. And I think that that's very powerful. I think a bottom is sight, is in sight, and 2026 is set up to be a much better year for housing than 2025.
And your conviction on 26 is getting better, not worse.
100%.
Now, Lennar's ASPs were down, right? Year on year, like down 9. Would you expect that trend to continue?
No, I think, look, what we need is rate stabilization. These builders are having to put in an incredible amount of incentives into the market, which lowers ASP in order to stimulate demand. If rates stabilize, I think folks will have a better idea of what they're paying. They'll feel more confident in the overall environment. And let me tell you something, if rates actually do decline, that's where it becomes very powerful. We're modeling gross margins flat across the group in a stable rate environment. If rates come down, that is a meaningful spring to profitability.
So you see 30% upside on KBH. That's with rates kind of in this neighborhood here.
100%.
Right.
Yes.
And anything on top of that would be gravy.
Yeah, I mean, think of it this way. Every 100 basis points of buy down is about 350 basis points of gross margin. Now, KB tends to actually reduce the price of their home as opposed to using the buy downs. Other builders use buy downs. But the point's the same. If you can actually stabilize that pricing, very powerful.
And it's your favorite name in the space or others on top?
Top pick is actually Meritage Home. We like the entry level the best. We like D.R. Horton a lot, but really we're bullish across the group. And we think the opportunity for all of these builders is getting increasingly powerful as we move through the year.
Yeah, there's been some chatter about the latter part of this year being a strong off season. We'll see how that goes. John, appreciate it very much, especially on the heels of that news. John Lovallo.